Hey guys, it's Nathan Gort with Win with Nathan, brought to you by theLender. Hey guys, today I want to do something a little different. We're not going to do a 2-minute drill. Love those. We're going to take a little more time and dive deep into a playbook, basically. So today on the playbook, let's look at what's the biggest conversation right now, which is current market. See what we are looking at, what reports are showing, and let's just dive into strategy. So today on playbook, we're going to look at the current market. With this, let's go ahead. We're going to look at first step is going to be the introduction, which is going to be the current state of the real estate market. Then we'll look at the overview, key trends that we're seeing. We'll also look at the housing market, see what prices are doing. We'll talk about commercial real estate with short-term rentals, long-term rentals. We'll look at different factors that are going to influence what's going to happen in the current year to come. And then we'll look at a few key takeaways. So let's start. So first off, the current state of the real estate market. Let's be honest, guys. The truth is no one really knows what's going on, right? There's a lot of ups and downs. The Fed waited too long before they started bringing the rates back up during the last 3 years. It's caused a huge movement where now we're seeing a spike in rates, spike in home prices over the last 3 years because rates were so low. The market is just forever changing, right? It's basically a roller coaster. You're going to go up and down, up and down, up and down. You're going to go, woo, all that. So with that, there are things we can do. Now is the biggest question with the market is, what do we see going forward? What should I do now? What do I see in 3 months? The biggest question I get a lot, realtors, investors, people are looking to buy houses, is now a time to buy? Is now a time to sell? Is now time to hold what I have? Or is now a time to panic and just sell off everything and go crazy? So with that, I will tell you, it all depends on your tolerance for the market, your tolerance on your cash flow, your tolerance on what your goals are, what is your strategy, and then ultimately, what are your long-term goals, short-term goals. That's going to determine whether you buy, sell, hold, or panic. So the key trends that we're seeing right now is in this market over the last 3 years, it is something that's changed real estate altogether, right? People are buying without seeing. They're buying with a walk-around video. They're buying by digital 3D tours. They don't see the property till the day of closing or the day before, right? And I don't mean this in a bad way, but buying a house has ultimately become just like buying a car, right? You go to the dealership, you view it, but that was the old way of doing things. Now you do online research, you find an area, you find an expert, and then you buy. So it seems like it's become more like that. On top of that, you're seeing realtors do a car dealership approach when they're listing properties, especially right now. And you can tell the market's slowing down because you're seeing selling agents basically going and change their listing by $1 or $2 every 3 days because they want to regenerate that to the top of the list so that more people see it, they think it's fresh and all that. And then that way an email blast goes out, price reduction, you look at it and go, hey, it's only changed $1. So the market has shifted more towards that. Is it for the better or the worse? I think it's great. You know, realtors are able to do walk-around videos and get people in houses that they're moving from California here to Tennessee. So it's great. The other trend we're seeing is a lot of people are switching from QM loans to non-QM, right? Switching from that conventional FHA type lending to bank statement, asset depletion, full doc, alt docs, excuse me. The reason for this is since 2010, we have finally hit a peak where it's the highest level. People are self-employed more than ever since 2010, right? This pandemic has caused a lot of people to quit their jobs, go into being self-employed no matter what they're doing. And so they can't qualify for QM loans. So what do? They have to find a lender who specializes in non-QM to continue to buy or to qualify for that house. That is a huge trend we're seeing right now. The other biggest trend, let's be honest, over the last 3 years, the biggest trend is short-term rentals, right? Everyone wants that Airbnb house or Vrbo, vacation home. It's a huge thing, right? Everyone wants a piece of the pie, more opportunities to stay anywhere you want. It's a great thing. What do we see in the housing market? What kind of trends with the prices? So the report came out of Q3 of this year, and the average price of a home was $454,900 across the country. That was the average price of a home sold. Q1 of 2020, right before the pandemic happened, we were at $318. So as you can see, the average price skyrocketed. So what does that mean? That means that people who used to be able to afford a $318 house, you know, those houses now that were nice and all that stuff, now that house is worth $454. Those people can't afford that same house now. So it's changed kind of the way that you have to look at a house and look at your buying power. So what else are we seeing? New listings. New listings are down across the country. It's the lowest level since 2017, according to one report. I was reading another report that showed Florida, one of the biggest realtors down there, was quoted in an article that said most of the listings that are being removed off the market aren't being sold. It's due to sellers not getting offers. So they're so embarrassed after day 30, 45 days, they pull their house off the market. They're not entertaining lower offers. They're not entertaining dropping the price. They just remove it altogether because they're embarrassed. I guess we can get into a little negative report. A report lately just showed that 8% of all homes that were purchased this year throughout this last 12 months are underwater. What that means is that most of those people have less than 10% equity in their home. 8% of all deals. Why is that? Over the last 3 years, let's just look at it this way. I can tell you for East Tennessee, I've seen people put $100,000 over asking price. I've seen people put a $100,000 appraisal gap. So if it comes in $100,000 lower, they're putting so much extra money just to get the deal that instead of doing $100,000, which might have been 20% down, they put $100,000 on the gap, and then they might do 5% down, right? So those people are losing a lot of equity. 40% of all purchases over the last 2 or 3 years, one report said, have less than 10% equity, and that is mostly on FHA, first-time home buyers, and people that put less than 20% down on average. Those people, about 40% of those have less than 10% equity in FHA. A lot of people are saying a lot of those loans are breaking even right now because they were so ready to get into a home. The trend of all this is we're seeing the market kind of stall in a lot of areas. We're seeing more sellers remove their listings. We're seeing more sellers accept lower offers, or you see more realtors now put on listings, hey, seller concession, this and that, all these great benefits. So the market has shifted a little. I will not say it's a buyer's market because I think every area is different. I think we still have a ways to go before it's truly a strong buyer's market, but we are in that stall in between. So let's talk about commercial real estate, right? Let's talk about short-term rentals. Let's talk about long-term rentals. Highest demand in real estate right now that I see in my line of business, and what I talk to other lenders about, is people trying to buy short-term rental properties. They're huge, they're hot, they're the thing to do right now. Also, it's a great way to build wealth over time, possibly quit your job, get that passive income. Then you've got stuff like long-term rentals, which is always a safe bet. And then you've got some people, I know a couple people personally that do midterm rentals, right? For people who are at hospitals, they rent out to people who have to stay there for a long time, training hospitals. You also got people that have to come in for big meetings. I have a buddy here locally that rents out to one of the biggest companies in East Tennessee, and their executives come from out of the country. They stay here 3 months at a time. It's great. With it being the hottest thing right now in the market is short-term rentals and getting into the non-QM space, we are seeing a record amount of people get into this field, right? Lenders that otherwise wouldn't touch these type of loans. Lenders that, where I came from and I was a broker, we would not do non-QM loans, whatever. Our bosses didn't want us to do them. There's no point, right? You didn't make that much off them as a lender. So now you're seeing more lenders get into it and try to do these loans because they're clawing their way for every deal. So right now you have a flood of people trying to do loans where you really want to stick to the experts, right? The people that created short-term rentals, the people that started using Airbnb and short-term rent to underwrite. There's a lot of options out there, but you want to find the right one for you and the best one. Factors that are going to influence the market is, of course, inflation is the biggest factor right now that's driving it. Also buying power, right? Not many people can buy a house they want. They would have bought 4 years ago, they would have bought a really nice house, this big, perfect for their family. Now, because of the price of houses and the price of everything else and the price of interest rates, right? That house, their buying power is down here. So now they're not wanting to buy a house because they want this house still. So what do? They're renting, or they move in with their parents. They're trying to save up to afford this, or they're waiting at the market. So ultimately, guys, look, there's a lot of reports out there. A lot of reports are predicting over the next 4 to 6 months, we're going to see, on average, some loss of values in homes. It's going to be more of a correction in majority of the country. That's till probably the end of spring. Then a lot of people are expecting a rebound. I've read 2 reports. I believe it was Redfin believes we'll see a rally of about 4.1% increase in appreciation in value of homes. We'll see more buyers back. We'll see more sellers. We're also seeing a slowdown in migration from like California, New York, and so on, moving to the Southeast. That will slow down as well. So what does this mean for you? That means that yes, right now is a tough time, but if you wait till summer or the end of spring when there's more buyers, those prices are going to go back up, right? You're going to have bidding wars, people offering appraisal gaps. Now's the time to buy. If you can find a deal, the numbers work, it makes sense, get it, right? You can always refinance down the road. So conclusion, key takeaways is, here's what I want you to do. What is your plan? What is your strategy? If you're going to buy an investment property, how will you stand out compared to the other? If you're a listing agent or selling, what are you going to do to offer someone to buy your house when right now many people are saying wait, or you might not have much interest? You can do a few things that will entice people to buy your house. Are you prepared for next year? Do you have the reserves to last if you bought a rental property? Do you know what your buying power is? And then also, do you have the right team around you to make the right decision, buy the right property, and win, right? Remember this, diamonds are made under pressure. Over the next 6 months, we're gonna have a lot of pressure in the housing market, a lot of stuff coming down where values might be losing in some areas. That's the time to strike. That's the time to buy. That's the time to build your wealth. Because if you can break even or just make a little cash flow, think how much you'll make when you refinance and get some of your down payment back or your interest rate drops. So if you have any questions, guys, call me. All our information is below. We look forward to talking with you here at theLender. We want to help you in any way we can.